Hello Financial Hub traders, welcome again to our channel here and another episode of our technical breakdowns. So today we won't cover a lot, we'll just do a follow-up of what we did last week, because last week we covered quite much, and just see where the market has been heading, what has been happening, and also talk a bit about geopolitics. And we saw last weekend, Saturday morning, Saudi Arabia, one of the biggest oil refineries in the world, was attacked, and Yemen claimed to take responsibility of the attack, which wiped out about 6 million barrels of oil, which is quite a lot. And if you're a trader, if you've been following the commodities market, you saw Monday open, that was a big gap, about more than 800 pips that opened, which wiped out many people's accounts. Many people made profits, depends on which side you were in the market, but that's mainly why the market opened like that. And there's a lot of uncertainty this week, as we know. Also, there's interest rates coming out from the US, there's interest rates from Great Britain, also from the Bank of Japan, and all those. So somehow the market has been shifted a bit, so we had a different perspective from the in the markets. But what has happened, what has conspired during the weekend, has changed a lot of things, which we'll look at in our analysis technically. So that's basically what happened over the weekend, and we're waiting for the interest rates, which are tomorrow for the US, which, as Ken has covered in our article earlier today morning, if you're in our group, if you're not, I'll leave a link below in the description about just a short description of what we're waiting to see, or what we expect tomorrow, that the US the Fed will, many of the forecast is that we might have a cut by 25 basis points in the interest rates, from 2.25% to 2%. And this is basically not to boost the economy, because the economy in the US is quite good, it's quite healthy. We can't see any bad thing happening on that side, but it's basically just to, as an insurance policy, against what is going on geopolitically with trade wars and all that. Ken has covered that, which I'll leave a link below, and you'll get to look at that better. So basically that's it. That's what we've been looking at. We're waiting for the great UK interest rates later on this week. You know what has been happening. We've been looking at Brexit, that transition with what Boris Johnson has been doing, and we're still following that up, and the deadline is now counting down, and we're waiting for the decision to finally being made after waiting for more than almost 3 years, 2.5 years or so. So that's basically it. That's what I have fundamentally, and now we can dive into the markets and look at what the market is showing us technically, and where we'll be heading in the next few days. So to begin with, today we'll start with the Euro USD, because this is a major pair that is being watched this week. So looking technically, what we covered last week, still the same pattern, nothing has changed. This is the daily chart, and I remember I'd covered last week, if we do a follow-up, that I was aiming for 1.110 level, which was hit. But before it was hit, we had the Euro zone release their interest rates last week, which have affected the market. And you can see down here, we actually spiked on this day. We spiked the previous low that we had attained this year, and we spiked it, and we went back up above to touch the target that we had covered. So I came out of that trade with a few pips before we reached my actual target, which was fine. That's normal in the market, it happens, as you can see over here. So I had an entry around 1.060 around here, and I came out around this level when I saw the market was moving sideways, and there was possibility of the market spiking down. So I came out of that trade, and later on we went and we just spiked that level, the first target that we had, and we went back down. So as I said, a lot has changed this week, and perspectives can change. And looking at the market, well, you remember I had a different pattern last week, and as I said, the more you look at the markets, the more you get to see different patterns forming, and which one is being respected, and you tend to follow that instead of sticking on one trade and one perspective, one bias, and going with that and dying with it, even if it's wrong. That's the big mistake many traders make. So when I adjusted my analysis, looking at this pair, you can see I have this channel, which the market has been respecting, as you can see. Just to show you what I had last week, I had sort of this formation. I had an expanding diagonal triangle, so it sort of looked like that. So about that. So something of the sort. So it started up here. So that's what we had. So we had an A. Let me just mark it. Just as a recap, I'm sure most of you remember what happened last week. A, B, C, D, E, which was still respected. As you can see, market came down. A, B, C, D, E. We got the E, then went back up. But now adjusting and looking at the markets properly, because I'd adjusted this, gotten that mark. But we want to see the bigger picture. Where are we really going? What's happening? So that's how I got to come back to that conclusion, that we're in a channel which is being respected and there's more momentum to the downside instead of the upside at the moment. So later on, when we wait for the Feds tomorrow to release their interest rates, market might spike down, create a new yearly lows before we head back up. And that's now what I'm watching. I don't have any trade on this right now. I'm just sitting back and watching. Remember, people, most of the money in the market is made when you're seated and you're watching, instead of just always looking for trades and jumping into trades without that clear perspective of where the market is going. So if the market spikes down and respect this channel, which I'm hoping the market does, but remember, hope is not a strategy. It's just that's a personal bias. So I'm waiting for the market to respect this channel. If we get that movement to the downside, create a new yearly lows, and we know in some strategies, when you're watching the markets, when you're getting to new yearly highs, yearly lows, there's always a pattern that is being formed that can indicate that the market might turn. So at the same time, while we're watching this, we're also watching the dollar index, which goes in tandem with the Euro USD, with a lot of emphasis on the US dollar, so which now affects the whole board, the US dollar, dollar CAD, Aussie dollar, and the rest, UJ. And looking at this pattern, we're still respecting the diagonal triangle that we had seen last week, and we might spike a bit higher, spike the trend line again, the upper boundary of the channel, maybe even spike up above before we come back down. So that's what I'm watching. I don't have any trade on the Euro USD, as I've said, but the pattern looks beautiful. The pattern looks like it's being respected. We might, like, if you look at this daily chart, we might have another spike, a third spike of the yearly lows, maybe even spike lower as we get a lower E. And so we're looking at maybe 1.092, 1.090, around that level or below that. That's what we'll be looking to go long. So that's basically what I have. At the same time, we cannot neglect that the market can shoot and go higher. We always have that in mind, always keep that in mind. So what I have as a boundary, you can see I've drawn a blue line over here as my resistance. It's a temporary resistance, not a really major one. So it's the same target we had, which was hit last week, so 1.110 level. So if we get to break up above this level and close above this level, which is in confluence with the downward trend line, if we're able to break and close above that, then we'll be slowly transitioning into a bullish territory. So that's what we're watching for now. We might have a lot of sideways movement before the interest rate is released tomorrow. So that's what we'll sit and watch and wait for the market to give us information instead of us focusing on where we want the market to go from our own bias. So that's basically what I have on Euro USD, and maybe we can look at another pair. So yeah, guys, we're down to USD CAD. As you can see, still same pattern. Whatever we had last week still being respected. I remember I had last week, I said I was more biased on the downward trend, and if you can see, nothing has really changed on the daily chart. So if you go down to the 4-hour chart, what you can see, I had different perspectives that market might be capped here or even around here, but we've seen the market breaking above both these levels and heading higher. So I'm currently looking for a more movement to the upper side in tandem with the dollar index. So if the market is able to move higher, what I'm looking for is another retest of this trend line that we broke earlier on a few weeks ago. So that's what I'll be waiting for. So especially with emphasis at level 1.330. We know this is a major level, so that's a level I'll be looking at, paying a keen attention. Also, the USD card opened with a gap. As we know, USD card is always in relation and has correlation with oil, and we know what happened on oil, and that's what caused this gap to open, which is currently being closed. So a lot of we'll see a lot of spikes tomorrow, so that's what we're waiting for. Tomorrow, whatever will happen, we'll see spikes on this market together with Euro USD as well as Aussie dollar. So that's what I'm waiting for. I don't have much to say. It's just a follow-up of last week. Nothing much has happened. Nothing has changed our bias. Everything still looks bearish. It's just a pullback. But if we're able to come and go higher past this trend line, this one, if we're able to close above that and continue to the upside, then we'll be reanalyzing these markets and doing another in-depth analysis of where the market might be heading. But for now, we're still on short term. We've looked at the weekly chart. Let's put that. We've been covering this, and what you can see, if you look at these patterns that are forming, it's really bearish. So that's what is really holding our bias to what we have. I'm open, always flexible. If the market changes direction, we'll change with it. I cannot force any issues. So, but that's what we're watching for now. We're waiting to see what the market will tell us. But at the moment, we're still looking for more bearish trades and heading with this market much lower than where it is right now. So that's what we'll be watching. But apart from that, now we can look at Aussie dollar. Then I'll go look at a commodity, which is gold. So yeah, guys, now we're down to Aussie dollar. Beautiful analysis we covered last week. Beautiful pattern the market formed. As you can see, last week's daily chart, nothing has changed. We had that bullish run that we had. First target was beautifully hit. Maybe if you go down to the 4-hour chart, so we had our first target which was hit, which was around 0.682 level. That one was beautifully hit, and we had our second target which market came shy of. We had an undershoot, and the market came about 7 pips from our target, which is still a really good profit target, which was more than 90% our trade analysis we had last week. And what gave another indication of the market pulling back is we had this channel at the top of the trend line of the upward movement, I mean. So if you look closely, market came. Remember, guys, I said last week, all that matters, it's not when we'll get to a certain level, but how we get to that level. We came to this level, formed that channel formation at the top of the trend, and market formed that beautiful A, B, C, D, E Elliott wave analysis. Market was capped by 0.6887 level, and after that market has stumbled. We are having a beautiful pullback targeting 0.6820 level yet again around here. And if we go further, if the market really pulls back, we'll be looking for levels with the Fibonacci levels around here. So a keen eye, what I'm really paying attention is 0.6750, I mean, sorry about that. So if the market is able to come all the way down here, maybe retest this trend line before we have that upward movement, just as we've seen with USD card, we're waiting for that retest. And also this is the same thing. So market might be capped by this. If we're able to close it might be capped by 0.6825 level. If the market is able to close below that, we might get that further momentum down to 0.6750 before we get that move to the upside. So that's what I'm watching. Market might also retest the yearly lows that we had, but I'm really I've been watching this pair for quite some time, and I'm really bullish on this pair at the moment. So we'll have that short-term retracement, that short-term pullback before we get that push to the upside. So that's basically what I have on this pair. Nothing really has changed. Just that beautiful pattern we had on the hourly chart. As you can see, beautiful pattern, A, B, C, D, E, breakout, retest, downward movement. Basics. So that's what I have, and I'll be waiting for markets to reach that level. As you remember, last week I covered that I didn't have any trade on this one, which was a good thing. As I said, the money is made in the sitting back and watching what is happening in the markets, and when the right moment comes, you execute perfectly. So that's what is happening right now. We're just watching what is happening, getting that beautiful analysis, what the market is giving us, and us not forcing issues into the market. So that's basically what I have on this, and maybe look at gold and wrap this up. So looking at gold, also beautiful analysis. Followed our analysis last week. As we covered, we were within this the 4-hour chart, and we've been respecting this channel that we had since a while back, and I covered this last week. And last week we were still trading at this level, if I can zoom that, around this level, and I said market might come down and we might be capped by this trend line, and that's what happened. So we came first time we came shy of the trend line, market went back up, came down, market was capped yet again, and we went back up, and now the market is still playing along that trend line, as you can see. Same thing as we had covered on the weekly chart, very bearish on this pattern. We're still on this pair, we're still looking for levels around $14.80 mark, then down to $14.60 level dollar mark. And those are not just wild guesses, I'm saying it's according to analysis, but something came up on the daily chart that I'd like to share. And if you look closely, we're sort of formed a head and shoulder around this level between a 400 pip range between 14.85 and 15.25 level. So maybe if I can label this better. So between these two levels, as you can see, we had this left shoulder, then we had that movement to the head, came back down, respected the neckline, and we came back to the right shoulder, and now we might have that movement back down. So what I'm anticipating is that we might have another touch of that level before we have that movement down, because this was just a spike. So market might actually come and close around this level before we move down yet again. So interest rates might affect this market tomorrow, but that's not what we're waiting for. Anything the market gives us, we go with it. What can happen is that you can see I've drawn inside bar formation, sort of. It's not really a perfect inside bar because we have all this spike up above. But if you look closely, if you look at the candlesticks that are forming around this level, they're all closing within the mother candlesticks. So all of them are within here. So you can see here, we're all closing below that. So if the market is being gapped by this level, which is a $1,500 mark, if the market is not able to close back up above, what we'll be waiting for is for the market to close below 14.85 before we have that major downfall down to 14.60 and maybe even further down. But that's basically what we have. So if the market is not able to close down below 14.85, we have those two scenarios. So those are the two scenarios I'm prepared for. Market might go back up, touch 15.25 yet again, just like behind here. If you can look, as we always say in the markets, what happens in history will help us understand what will happen in the present and what is yet to come. So the further you look into behind, the more you can see into the future. So looking at this analysis, this spike, same thing happened. We spiked between this 400 pip range, then market went back up, closed at that level, then market went down before it went back up. So same thing might happen over here. We had this spike between the two ranges, two levels, and market might go up before we get that downward movement. But anything the market gives us, we go with it. So basically analysis, that's the basic analysis I have on this. Down to the 4-hour chart, we have this another mother inside bar formation. So looking at this, market is still playing within this mother bar, and it will give us an earlier indication before the daily time frame where the market will be heading if you're spiking up above. So if you're able to close above this level after we respect this trend line yet again, we'll be looking for that $15.20, $15.25 mark before we get that downward movement. But if the market is able to close below, we'll be looking for shorting this market down to 14.60. So First target 1475, as Ken had covered on our technical articles on our website, which I'll leave a link below and you can go and look at that. But if the market is also able to close up above, we'll be looking at 1520. So it's just having two scenarios and weighing the probabilities of which one might happen. So really waiting for the interest rates tomorrow from the US, and then also the attack on the geopolitical things that are happening with the Saudi Arabia attack also made this market open up above, because I had a short position on this one, a beautiful 200 pip movement down to 1485, but market opened with a gap up at around 1505, 1508, around that level. So we've been playing within that range, and now we're yet to see where the market will be heading, telling us, and where we'll be heading next. So that's basically it. This was a follow-up analysis on what we had last week. It's not really an in-depth analysis because we did an in-depth last week. So if you haven't watched last week, you can rush and look at that so that you can understand what we're talking about here. So there's nothing much to say. That's what we have on the markets. I hope you guys are trading. I hope you've taken trades from our analysis. And remember, we always say our trades are not to give you or to change your perspective on what you're seeing in the market. It's just to give you an insight on what different traders are looking at, what we're looking at. So do your own analysis, do your own research. If I say I'm more biased on looking at the market if gold is going up, that doesn't mean you should change your perception and look and enter that trade and go long together with me and start blaming the markets or start blaming Financial Hub for you making a loss if the market actually tumbled down. So do your own analysis, do your own research. The more you look at this, the more you trade, the more you get accustomed to it, the more you get used to it. So that's basically what I can say. As we said last week, the course is still coming. We're just finalizing on a few things, and very soon we'll be launching that. So that's basically it from me, guys. I don't have much to say today. Like I said last week, stay wahana, may the pips be with you, and enjoy what you're doing. The market is a beautiful place. So see you guys next time.